Markets flipped on a single line out of Tehran. Good progress. That's all it took to send US futures climbing and oil sliding. As traders bet the 111-day US-Iran war is closer to a real ceasefire than headlines have suggested so far. S&P 500 futures clawed back 0.6% from session lows. Nasdaq futures recovered 0.5%. Russell 2000, the small cap gauge most sensitive to economic stress, rebounded 0.7%. And that is often the sharpest tell of risk appetite returning. Oil is the real story. Crude erased its entire war risk premium down 3% as the prospect of Iranian barrels returning to global markets outweighs lingering supply fears. The proposed 14-point memorandum would reopen Iran's access to global oil markets, ease decades of US-led sanctions, and even unfreeze overseas assets worth more than $100 billion. And that's a lot of crude potentially flooding back into a market already pricing its scarcity. But good progress isn't a done deal. US officials have pushed back on reports that Tehran gets frozen assets or sanctions relief upon signing. Any release is tied to Iranian compliance and verifiable nuclear concessions, including the disposal of the enriched uranium stockpile still with Iran. Washington is deliberately decoupling the headline from the cash. That's why gold and silver are rallying alongside stocks, a signal markets aren't fully convinced with. Safe haven demand rising is in tandem with risk assets means investors are hedging the headline, not trusting it, and Bitcoin's 2% gain fits the same liquidity-driven bounce, trading more like a risk asset than a hedge here. Frozen Iranian funds are estimated between $124 billion and $167 billion, and banks remain wary of financing Iran-related trade without explicit US licenses. Until Congress and Treasury clarify the legal mechanics, this rally is... And markets are pricing in peace, but Washington hasn't signed off on the price tag yet.